Thanks for being here. Appreciate you all. I was just getting ready to open a soda. Uh-oh, here comes Jax trying to figure out where everyone is. Jax is like, where is everybody? Come here, Jax. You want to check in? Come here. Let me see you. Come here. Jackson, let me see you. Do you want to check in? Where is everybody, Jackson? Where is everybody? Oh, give me a kiss. Oh, yes, sir. Okay, Jackson, go behave now. Go behave now, okay? Go behave. Just go behave now. All right, guys. Let's remember to share the screen. Jackson, why are you looking at me? What do you want? He's like, who are you talking to? Shut up already. Oh, hang on a second. I'm going to get him some food. All right, Jackson, you should be good now. All right, guys, thanks so much. Hey, Mark, how you doing? Appreciate you for being here. All right, let's see what we're going to look at. Let's just start with some high-yield technical analysis. This is becoming my favorite feature, or just one of my favorite features. Sort the column Z to A. I guess just pull up the old chart to Ruski. There we have it, MSFY, NFLP. It doesn't really change that much from day to day. It looks like GPTY was in fourth and has moved up to third. Well, that's good to see. I really like to see that. But anyway, any of these up here, or all of these, any of these on this thing could be good. I mean, I have, for instance, I have GDXY. It's not even on this page, and I'm happy with it. I thought it was on the page, but I'm real happy with GPTY. So anyway, all right, guys, let's look at some other stuff. Premium collection, model portfolio. Yes, this one I want to look at because the market turned down. I wanted to see how the model portfolio was doing. I just checked. I just checked the actual statement because sometimes I think the statement's different than the spreadsheet, but the statement actually said down 30 basis points, and this is down 34 basis points. So that's right. Okay, but that's a victory whenever the market's down 3 times as much as that. All right. You can see ULTY is hurting me, but GPTY is helping me, as is YQQQ. Great job, as is TLTW. All right. I guess we should have looked at the market first. I was disappointed that the market sold off, but you can see just from a distribution standpoint out here, it was, what do they call it, over its skis or ahead of it got ahead of itself, whatever. The mean is back here. Even if it doesn't pop all the way back, there's more comfortable trading ranges that aren't so far up there. But if you're a bull, you can use one of these more comfortable trading ranges like where we're at right now, for instance. If you're a bull, this is a nice opportunity to buy a call for next week or something. What day is this? Tuesday? You can even buy one for this Friday. If you're a bull, I mean, sell a put. All right, let's look at the SPY. Buy a call, sell a put, whatever. Do something. Okay, now the SPY, for instance, this is in a prime territory. Okay, this is the trade of the day, because it's pulled back right into this zone. So let's do a dip buy trade. Let's just play for a new high. Let's just play for 608, 610 or something. But let's really load up on it. Let's go for like 610 by Friday. Is that? Well, let's look, and I'll show you how I determine if that's too fast. We can look several ways. We'll just look at let's just pull up a little SPY on the tasty trade. All right, over here we have all the IVs and the expected moves, but so Friday is right here. Let's just go look at the expected move on Friday. See this brown bar right here? That's how far the expected move is. So the expected move down is to 589. Expected move up is to 607. In options, the left side of the screen or that side of the screen is calls. This side of the screen is puts. And down is up in price, where up is down in price. I know it's kind of, and this is the way they printed option tables in newspapers. So that's, so anyway, I think that's the only reason they did it this way, because it doesn't make a lot of sense. Anyway, okay, so let's look at this though. So if we're looking for 608, 610, it's not the end of the world to think it might get there by Friday. It's a little bit past what the market maker expects. The market maker is expecting about 606. Okay, so but it's it's within the realm of possibilities. So now now that we've checked it there, let's go to option strat. Gosh darn it. I still didn't find out what time my spaces is. If it's at 3, like as in really 4, it is in 3 o'clock Central and 4 o'clock Eastern. I know it's at 4, but I don't know if it's 4 o'clock Central or 4 o'clock Eastern. So I may have to kind of get going after this. But anyway, all right. But let's just look at this. Look at this idea. If you just want to, sometimes I like to do this idea. Let's just see how it works out. Just put a call fly, and we're just going to target that strike. All right, we're going to target that strike, and then we're going to look at everything else and set the rest. And you can see the one standard deviation is right to about 609. And it's a little bit past the market maker expected move, which is at 606. But if it hits the market maker expected move, there we are at 606. It's a $422 winner, All right. There's probably better ways to buy the dip than that. I just sometimes like really loading up on just a small move. But there's probably better ways to do it. I'm just going to save it. I'm just not in a very creative mood today. Aiming for 609. The thing that when I say that, I'm not using my brain, because the thing about the market is the SPY can miss on the upside. It's probably not going to, if it goes to 609, it may just not go there and stop. It could blow past there. So we probably want to do some kind of trade that has some type of more upside than that, because what's going to happen, the bad part about this trade is it goes there too soon. It goes there tomorrow morning. And so it goes there tomorrow morning, and you're like, okay, it's all $199. You're supposed to make twice that much. You just went there too soon. Okay, so I just got to hold on. I just got to hold on and sweat it out. Hopefully, if it goes up, it'll be all right too. But I just got to hold on and sweat it out, and then it goes back down. So that's the timing on these is that wasn't the best trade. That wasn't the best trade. Don't do that trade. Anyway, that trade. Here's a better trade for that type of thing. And I have one on in real life right now that's not working out, but it's called a convexity spread. And it's where I'm also loading up on the wing, but doing it in a different way and just trying to spend as little money as possible. Let's do it. This convexity spread is not going to work out because we wanted higher prices. It's going down. The good thing is it only lost $93. But let's put on another one of these real quick, maybe. Forget exactly how I did this one. All right. Yeah, it's something like that. I was just a cheap way to load up on some out of the money options. I was just trying to find a way to $115. If it does go up by Friday, go way up. There's your YOLO trade right there. That's a YOLO for targets. It just targets higher prices. It doesn't get penalized for getting there early or getting there early or there was something else I was going to say, but it doesn't get penalized for getting there early. Okay. Hey, Summit, how are you doing? There's that trade if anyone's interested. Those are just YOLO trades. You're I'm selling a put spread that's like a or buying a put spread that's a high percentage play. And there's nothing wrong with that. I'm into these what I'm calling them compound trades now, like the lightning spread. The lightning spread's a combination between long stock and a short put spread. You could even call it, an iron condor is a compound trade because you're selling a call spread and a put spread. A butterfly is a credit call spread and a debit call spread put together. This one right here, the idea is you're just buying the 605 option and selling the 610. And that's not a bad way to make some money on if it just makes a little move, just goes to 605 or something, you can make if it gets to 605 by expiration, you make $350 on that, $115 risk, and that's fine. That's fine. It's a compound trade, and if it happens to go, but it has two strategies built in. If it happens to go further, you're on board for that one. You're on board for that as well. So, but see, it's two strategies at once. It's a high percentage strategy and a low percentage strategy, just run at the same time. You're 9 to 10 minutes behind. Yeah, Mark, it's been a good day for you. So what did you do? Did you have the pullback might have hurt some people, right? But maybe you use the pullback to cover some short calls probably, and you got to cover them even cheaper than you were planning on it or whatever. But yeah, I'm sure every day is a good day when you're Mark and know how to use options like Mark does. Let's go check on this Twitter thing, this Twitter Spaces. What time is it? 2:49. All right, yeah, this is the right profile too. So I'm just going to read this thing from this guy really quick. And Ambassador of Quan is the guy's name. Have you guys ever heard of this guy? Okay, so today at 4 p.m., it says reminder set. I haven't got the reminder yet. That means 4 p.m. my time. So I don't have anything to worry about. We could shoot the breeze longer. Right. I just want to make sure it wasn't like coming up right now. Yeah. So what does Mark do? You sell covered calls every afternoon, typically make 800. It's easy peasy, 800, 1,000 a day on them. Yeah. Heck yeah. Heck yeah. I'm glad to hear it, Mark. 800 to 100 a day. Okay, as high as 800 but sometimes only 100. I thought you were saying 800 to 1,000, but you're actually saying 100 800, right? Anyway, all right. So what's going? What else is going on? Okay. Oh, hey, we gotta get serious for a second. You guys, have you heard about this fund? I talked about it a little bit earlier today. I have there's a new story is dropped on my Patreon. It's exclusive for Max subscribers only. No, my Patreon's free. Everyone's a subscriber. Everything I have is free. It's all volunteer stuff. I just got Patreon because I want to publish stuff sometimes physically. So anyway, I would be really slick if I had the Patreon link, wouldn't it? I think I put the link in the description of this video, but I don't know if I can get to it in here. There's a description you get to when I'm doing it. I thought it was in there. Hang on, let me just find it this way. So here it is. Copy post link. There you go. Wow. I need to figure out. I guess I need to get a TikTok. I don't know, and I need to get a Instagram, all these other things. I need to get my blue check mark on Twitter. But anyway, go read this. This is about BLOX. And I wrote about it, and I wrote about the lightning spread, but you don't have to read it. I'm going to give you the report right now. If you guys want to get the report, let's just go get the report. So let's just go get the report. So it's a new ETF alert, BLOX, BLOX. It's from X funds. And we don't talk a bunch about X funds here, but we do talk about FIAX and GIAX sometime. I believe FIAX is in the buffer report. GIAX is a heck of a good fund that people kind of forget about. That thing pays 24%. It's a target fund, but it's paying 2% a month. I don't know of any other target funds that target that high. There's target 15, there's target 12, there's target 20. There is going to be one that's target 25, though, isn't there? But I don't think it's actually out yet. But anyway, that GX is, and they don't really call it a target fund, but it's paying 2% a month and getting tons of upside. The manager is a guy, I believe his name is Jonathan Nicholas, and he's like Jay. He's a money manager. He's a wealth manager that's moved a lot of his business over to ETFs. There's an interview with him and Jay, and I've seen bits and pieces of it. I'm trying to recall about his background from the interview. But anyway, he's an interesting dude, young guy, interesting. So, I was just looking for something new to put in the model allocation. I'm thinking about the model portfolio allocation all the time. And I really wish the model portfolio allocation had more exposure to crypto, DeFi, and Bitcoin. Or I should say, I wish on days that those things are up, I really wish it. But anyway, no, seriously, and I think I do need to add some more. So I was thinking about selling something, rebalancing a little bit, and adding some more LFGY. Well, anyway, I'm just going to add BLOX in the morning. I was going to do it today, but it's 2:54 and I haven't yet. But I'm going to add BLOX to just a starter position, and then we'll see what happens. But anyway, okay. So the thing about this is it's one of these hybrids. It's using a compound approach. They're actually going to hold the stock. So they have two strategies at once. It's just they hold the stock. So that's unlimited upside. Okay. But they're also going to sell put spreads, not call spreads. So their upside is not going to be capped. They're selling put spreads. Now, the first interview I had with Jay, one of the first questions I told him, I said, if I was your business partner, I would tell you, I'd say, Jay, we've got to start selling put spreads. Remember, they were selling those naked options, and they still do in Defiance, and he didn't listen to me, and Defiance has done just fine without my advice. But the whole time I said, why didn't these guys just sell a put spread, and cut off some of the big down days? You'd have, and the reason is because they wanted more yield. You'd only have about half as much yield, But anyway, they're finally doing it though. Now they aren't. I wish they would just take an index product and just sell a put spread, and they aren't doing that still. But they're doing something similar. This isn't an index product. They actually own the stock, but they're selling a put spread in addition. A put spread is probably the best trade. If I could only do one trade, it'd be selling put spreads. If I could only do one trade, I'm trying to think. That's kind of a tricky question, but I mean, it'd probably be put spreads. I don't know. But so these guys own the stock. So the put spread, I've downloaded the trades, and obviously it's too early to tell. The thing is, they're on some of the shares, they own the stock and they're selling a put spread, but on other ones they own the stock and they're selling a call spread, i.e. the same strategy that YieldMax does, but still not capped. I mean, it's capped to the extent where they sell the call, but then it becomes uncapped over the strike of the call they bought. So I would say most of the funds have I guess we can look at the positions here. I mean, that's what I wanted to do. And we can even look at I even back tested a little bit, and that's why I'm excited about it, because this back test really, really well. This lightning spread, and it's not just this type of strategy that uses multiple strategies at once, is interesting to me. The strategy that I'm always talking about, the GOAT spread that outperforms any of these other ones, I can't get any of these fund managers to do. It's a compound strategy. So anyway, these compound strategies are interesting, and I have a feeling over the next year we will see somebody come out with the GOAT spread. I mean, because everything's coming out, and anyway. But it's cool that we get the lightning spread. Everyone was waiting for QLDY from Defiance to come out the lightning spread. Now they aren't waiting because of the lightning spread. Only option nerds, because like me, are in it for the lightning spread. They like QLDY because it was going to pay daily, but now it's going to pay twice a week. But I think most people are interested in it for that. But I'm telling you, these lightning spreads, this is a good strategy. What I'm going to say, it's like poor man's leverage, or it's like smart leverage, or say it's like leverage without downside, really, or there's no such thing as without things. But it's like, I need to think of a way to describe this. Let's just do this. Let's stick with the facts. Here's the BLOX positions. So let's just look. And this was as of yesterday, so we can see how we can see how they did today, their first day. I mean, but so look at this. So Coinbase, they own 342 shares of stock. They're selling a put option at 262.5, and they're buying a put option at 257.5. What that means to me is these guys, their exposure, they're long the stock. That's their risk. The stock could go to zero. They're long the stock, and they're double long the stock between the two strikes. So the total risk in this trade is $261. It's however much you have in that. Right? That's the total risk. Now, some of these, they have kind of the opposite one on, like, well, I know I was going to say, but okay, on Coinbase, total risk, just let's talk risk. Of course, stock is risking down to zero, but you can hold it forever. So it's not really that risky. But I mean, you have to be aware of what it is. So you have stock, and the additional risk you have is the distance between 257.5 and 262.5. That's 5 points. So that's the additional risk. Let me try to think of a better way to. Well, heck, I think I did one of these trades last night, and These would be good. I mean, it's not going to be long before one of you guys is doing these in real life. And once you see my back test, check out this back test. One of the companies in the fund is Taiwan Semi, TSM. So I back tested the strategy. Here it is for the past 2 years on Taiwan Semiconductor. The top two strikes is just the stock. It's a synthetic. You just own. I mean, these guys actually own the shares, but to test it, I had to use a synthetic because Tasty Trade only lets you test option strategies. But it's the same thing though. Synthetic and stock, it's the dollar. It's the same thing. Anyway, so the first two right there just replicate stock. You're long in at the money call and short in at the money put. That 20 days out, that gives you stock exposure for the next 20 days. But then what these guys are going to do is they're going to come in the weekly cycle. Some of these are in the monthly cycle, some are in the weekly, but I just tested in the weekly cycle. They're going to come in and they're going to sell an at the money put. Okay. And so think about that. So when you sell an at the money put, that obliges you to buy Taiwan Semiconductor. So the fund already owns Taiwan Semiconductor. And then if they sell a put, boom, they're double long Taiwan Semiconductor because they're long through the put and they're long through the stock they own. However, since they sold a put spread, they're only long for those 5 points. So they have $261 worth of risk on the stock and then 5 points worth of risk on the option. The thing is, if you test this and there's no special stuff, no anything, just one trade at a time. So we'll just run it back over the past 2 years. Let's think about this. So on a big down day, you would lose. But on an up day, you would win double. I mean, because you would win from the sold put spread and you would win because the stock would be doing well. On a sideways day, you would win from the sold put spread. The stock wouldn't be hurting you. Even on a small down day, the stock would hurt you a little bit, but you would still win from the put spread. It's like anything else. You're just trying to avoid big down days. So now look at this. If you just bought Taiwan Semi and held it, it made about $5,000, but it's about twice as much. You doubled your money doing the lightning spread. And of course you did. We can look at the individual trades because it's a badass strategy. When Jay showed this to me, I wish I discovered this. He showed it to me, but then I started messing with it and came up with variations. That's where I came up with the GOAT. The GOAT is the lightning spread on steroids. I mean, Jay's going to do the GOAT someday. He just doesn't realize it yet. But I spent, days upon hours testing every strike and every type of different strategy that you could put together. Anyway, but this is a good one. And this is one of look at this. You win 60% of the time. It's just a good, here's the main thing you would do this for. It's the premium, right? So you do it once a week because it's the trade lasts 5 days. So you do it once a week. So it makes $119 a week. It only ties up $10,000. That's what I'm saying. I'm sure people will start doing this. It's a great income strategy that no one's doing right now. Because on $10,000, well, no, I'm saying it only tied up $4,700, but it made, look at the premium, $11,000. So and this is over the course of 2 years. So it's $5,000 a year, but that's only on a $10,000 investment. That's, you know what I'm saying? It's look at this. So look at this. Let's run a new back test. Let's run it on the SPY. If it's really good, it should work on the SPY too, right? Or it should. I mean, you want when you have a system, it ought to work on multiple things. When you have a good edge in something, it ought to, but it doesn't always. But let's test it on the SPY. But if you can outperform this, if you can beat the market with the SPY, and they did, look, and just buying and holding SPY for 2 years, you're up 37%, which is pretty good. You could have done this. A guy like Mark could have done this strategy. Could have just owned 100 shares of the SPY every week, just sold that put spread. Well, look, you would have come out a little bit better than them. And The reason you're doing this is for the income, right? We wouldn't do this. If you didn't need the income, you would just buy the SPY. So let's see how we did in the income department. Average premium $103, and you held on to 55 of that. You know, there's some strategies that you get a lot of premium and don't end up holding on to any of it, but this one you're holding on to about half of it. That's a week. So a person, you know, I mean, this is a good strategy. This is a good strategy. It's a good strategy. Full upside, right? There's no same upside as stock because you have stock. So just imagine had somebody been doing this on Palantir, if this fund had been out a year ago. Okay, think about that. So it has the stock. Can you even imagine? Yeah, and the put spread thing would be making money and doing it still. But the stock is just the stock. It's unencumbered by it's a genius plan. It's a freaking genius plan, I think. What do you guys think? Anyway, that's my review on that. Go, if you want to, go read the Patreon. But I guess we can look at these trades some more. I mean, so look, they also have TeraWolf. So they have 20,000 shares of that. But then in addition, they sold the 4.5 put and they bought the 4 put. So here's a good example. They're long. They have $433 risk through TeraWolf, but then they've added an extra 50 cents worth of risk through these puts. Okay, but they're going to hopefully get a whole heck of a lot, you know, of reward for that. Some of these do have a call spread. Yeah, there's one right here, NVIDIA. Or a put. Was I just seeing stuff? I was up too late last night. This one has a call spread. The Fidelity Wise Origin Bitcoin Fund. What's that? FBTC? And what's this HODL? It's a good name, but I thought this is interesting. They own HODL, but there's no options written against HODL. Not like these strategies encumber them anyway, but it looks like they just own HODL and they don't have any options at all, where everything else, they own the stock and they have some type of option strategy overlay. So, and it looks like HODL, which is just the Van Eck Bitcoin ETF, is 20%. And then it looks like this Fidelity Wise Origin Bitcoin Fund is 20%. And then one thing I've never seen in an income fund yet is this one called, well, yeah, is this one called? They have 10% Ether, ETHA. They have 10,000 shares of that, and then it puts, and then. So, do you guys see calls, or was I just seeing stuff? CL, I guess that's CLL's call. So, they have iShares. Just trying to make sure I have this right. Plus, they sold the 21 strike and they bought the 22.5. Okay. ETHA does have. ETHA even has options on it. I didn't know there was Ether options yet. 21 and 22.5. Let's see what they're doing there. Does anyone have this ETHA yet? So they have the shares. We're just going to put buy ETHA. So we have the shares, and then what was it? They sold the 21, or I think they had the 21 sold, and they bought the 22.5. Something like that. Yeah, something like that. And see, even on this example, you can do it for a little bit of a credit. They probably went out further, but if you go out to next week, you could do that. I mean, heck, I wonder if you could run the wheel on this. Is this a wheel? I mean, what's the IV? IV's 82%. This has the right price for $20 is perfect to start a will at. I mean, anyway. I'll save it just so we can watch this trade. Anyway, I'm interested in this obviously, and it's not because of the crypto. The crypto is just a side effect. I mean, that's great too. I'm interested in it because that strategy is going to be really, really badass. Guys like Mark, what it is what I'm really excited about is guys like Mark and have been doing this for years, and it's awesome. And I've always been one of those guys, but it's awesome now that there's a whole new world of other guys like Mark and like me that are in the same club and know how to do the same thing. It's a whole new group of people we can talk to about this. My best friend, or one of my best friends growing up, Doug, he taught me all about horses and thoroughbreds, and he actually is a horse trainer and a horse owner. But anyway, but I'm teaching him about options. So, and he's learning a lot. Anyway, all right. Retire on dividends. You're ready for bed. I'm gonna bring up the level of the show since you're here. Yeah, you guys are tired. I got you. I got this darn thing. Retire. What do you know about that? Are you going to do that Spaces? I'm supposed to do that Spaces on today at 4:00, I think, with Ambassadors of Quan or something. I don't even know any of those guys. Anyway, I've accepted the invitation. So, yeah, I hear you, Retire. I hear you. All right. Well, I want to look at the buffer report or something. You guys will just talk amongst yourselves. Let me find something to ramble on about. Well, you guys can just keep talking. But seriously, let's go get that fun. Let's go get BLOX, BLOX. I mean, what's not to like about it? I mean, I'm trying to think. So what's not to like is it's basically, here's the thing. BLOX, here's what I like. What they've done is BLOX is basically combined GPTY and LFGY. Because it has some, it has TSM and NVIDIA in it from GPTY, but it has CoreWeave and, it has some of those hardcore Mara, some of those. So I think basically it's kind of a happy medium between GPTY and LFGY. That's kind of my final thought on it. Anyway, all right, let's look at the buffer report and see what's buffering. All right, index buffer report. Kind of an ugly day there. Oil, I'm sure, right? Yeah, USOY, TLTW. I mean, I'm just going to try to pick out the ones that did the worst, maybe. I mean, had the toughest time with ZVol. ZVol is real sensitive to vol, and vol popped up today, so that it doesn't surprise me. LFGY down 1.7, led the way, actually. Of all the high yield funds we follow, led the way. Oh, well. All right, let's look at the index buffer report. But I'm taking it Retire's probably not doing that Spaces if he said he's going to bed. He probably turned down the invitation. But I was just wondering, anyway, I guess I'll just go to the Spaces and let you know how it goes. All right, I'm getting bored of this. Let's look at this. I like this high yield TNA. Why is LFGY? I love LFGY. How did LFGY not even make the top 20? What is going on? Come on. Oh, look at that. We just got a new prize. Anyway, so let's go look at the data and let's just kind of examine, let's kind of see what where their weaknesses are. Is it too risky? Is it, see what it is. There we have it, line 47 here in the database out of these 82 ones we follow. All right. Cost $38. Paid $10 over the past year. I don't even think it's been around a year. But anyway, so here's the problem though. It's momentum its short-term momentum is no good. So why is that? What is going on? Did they get stuck bag holding something miss earnings or something that they had? It's probably what it was. But I'm just making sure. See, that's that number right there, and that number is just one of many numbers. But when you're comparing them to the other funds, and you have other funds that are ahead of their moving average that do the same thing, and then this one's under, you just know it has a little relative weakness. Maybe I should dump this one and get blocks. I don't know. I do like to look at this one. I mean, this one's been around for half a year and it's paid 27%. I mean, come on. But I can see some blocks in. I'm definitely going to get some blocks. I'm not going to dump LFGY. If nothing else, LFGY just has a cool sounding ticker too, right? All right, what else we're going to look at? Okay, so high yield technical analysis. So that's what's hurting. That's what's hurting that stock. Now I want to look at something else. The review, we were talking about those X funds. I want to look at some of those X funds in the max factor and see how they stack up in the max factor. Remember yesterday when we had a duplicate and I was trying to think of what to put in there? That would have been a great place to put in those funds, but we'll just add these. Row above and row above. So the symbols are FIAX. I believe the guy's name is Nicholas. And GIAX. I think that's his last name. Let's see if now these, wonder if these are number 1 and number 2 on the max factor, and I haven't been tracking them. Oops. I don't think they'll be number 1 and number 2, but let's see if they hit the board. All right, so here we go. We just resorted. No, they didn't hit the board. Okay, so let's see what happened to them. Let's see what they did do. All right, well, here's this is the one I'm most interested in because it's stocks, global stocks. And there's this one that's paying 24%. That's huge. So it's $17. It's paid $3.76. So let's get it up. Let's bring it up in the other window so we can look at that. All right. Yeah, there it is. So it has been around for a year. It's saying 21%, but it's impressive. Performance year to date is down 6%. Performance for the quarter, it's up 3%. That's not bad for the quarter. I mean, that's good. Up 3% for the quarter. It's all right, right? All right, back to the high yield technical analysis. Anyway, those will be on there. If there's any others that are not on here that you know about that I don't know about, I mean, let me know. I even have IDVO on there and DIVO. A lot of people, sometimes those pop up as being good ones. I mean, we'll look at anything. If you guys want to check this yourself without having to watch this live stream, I have a website now. It is maxconvexity.iagon.com. Iagon is spelled IAGON. It's a Oh, it's a DeFi something or another. Anyway, it's a token on the Cardano blockchain. But in any event, um, and this page and this page and the model portfolio and this page are live there all the time if you just want to check in and see how something's going. All right, what's going on here? You guys, I like your conversation better than mine. What are you guys talking about? I don't. I need to get some. You guys all have Palti. I need to get some Palti. What was the estimate? Desire said he's be like he's within 50 cents. Is it really going to be $6 or something? In that what people are talking? Yeah, they rolled the synthetic. We talked about this some at lunch. Who knows? All right, that's fine. What makes the percent up or down? Okay. Like in yours, sometimes the dips help the short. Yeah, that's true. That's true. All I'm doing is looking at what I'm saying. I'm looking at how the market is valuing my portfolio. But you're right. Sometimes, and so, but, but no, I hear what you say. I hear what you're saying. I hear what you're saying. 460 for the month on PLTY. Okay. I'd heard something like that too. What did it pay last time? I'm pulling it up. We'll check it out. I'm really excited about lightning spreads. Also, I'm more invested in it because Jay called me and he didn't ask me to help him or whatever, but he had seen the show. I'm just happy because he had seen the show and he'd seen me talking about one of my strategies and he liked the software I used. He didn't know what he had. So I showed him option strat and we talked for about 10 minutes and he told me about the lightning spread and then told me I couldn't tell anyone. But anyway, that's so I'm more, and then I forgot about it because he didn't say anything and I thought it just didn't make the cut or whatever, but I'm so glad. The only way I could be more happy is when they bring out the goat spread. So SB's been helping me on the goat spread. SB kind of figured out the goat spread. Most people figure it out on their own. I mean, it's just what you get to when you're back testing and you're trying to maximize for results. You'll end up on the goat spread. All right. I don't know. It looks like the computer just died. Is that what's going on here? Carne asada. What in the heck is that? I guess it's a FinBiz ad. All right. Well, anyway, PLTY. Okay. So last time they paid, this is all I was trying to see. $7 last time. Man. $4. Time before that. $5. $5. Yeah, that's insane. All right, I'm gonna get out of here. I'm gonna shut my whole computer down, shut every window I have open and stuff before that live stream. SB, you'd be fine with 441. Yeah, it keeps the nav higher. That's true. That's true. It'd be. I've thought about it a million ways. It'd be cool if they could make one of these funds that try to maximize return instead of maximizing yield. But I think the weakness is in the ETF structure. That I think it just because of the rules or because people would be trying to jump in and jump out, they just basically have to just give all the premium income out every month. But if they could invent one, I guess you just have to make it a closed-end fund where people couldn't have the daily liquidity. But I've said this yesterday, but I would love to, they should do one of these and do it kind of like SB's doing it or something where they're selling premium, but what they're doing with the money they get from the premium, they might be buying leaps. So all of a sudden they don't have less upside. They have the same upside because they're spending part of their income on, but you don't get a premium. But now all of a sudden you have a fund, or maybe that gets more upside. It's almost more like a leverage fund. Anyway, they need to come out with a strategy called return max. But I just don't think it would be it's feasible with the way the rules are now. I mean, people have asked Jay all the time, why don't you just, hold some of the money back? And, anyway, it's just not, I just think it's not working, or not going to work. How do you get these crowns on? Oh yeah. How do you get the crowns on the users' names? What is that? When is the first guy in the room, does he get to be king of the room or something? I've seen that when I watch my own live streams back sometime or something. But yeah, the little crown. I wasn't sure on that, how that works. What was touching 100? Oh yeah, PLTY. No, I can't. Was it really? You got to be kidding me. I didn't realize that. Holy cow. Yeah, and I didn't buy this back right here. I'll tell you when I didn't buy it. December 10th, right here. Yeah, it was 69 because it was too expensive. It's too expensive. I won't be able to get very many shares. Just, I know what I want. I'm going to go get AMDY. That's a lot better pick, right? That worked out great, didn't it? Let's look and see what. Now I've clicked on the Pepsi chart, but all right. Well, what's going on in Iran? All right, guys, I guess I'm just going to start everything down. This is running absolutely terrible. Anyway, you guys have been wonderful. Thank you for being here. Appreciate it. Yeah, SB does want to be the king of options. SB's scramble in my room. I would say scramble, but we have a lot of good option traders. But scramble is good. BR's a good. SB's a good option trader. I'm forgetting Tom, we have a lot. We have like 5 or 6, but scramble, I would say, does the most complicated, sophisticated trades. But we have a bunch of good. But SB's right there too. SB invented, like I say, SB came up with something the other day, and it's the same thing I've come up with before. But that just happens when you're doing options. Last year, the same thing happened with me and a guy named Echo Eversky. He's not in Discord very much, but I've met him at Rod's Discord. A great guy. I just haven't seen him lately. But same thing. He got real into options, and I showed him a few things that I like to do. And then he started back testing. He went crazy, and I talked to him like a month later, and he had discovered all the same stuff I discovered. It's just where you end up when you start back testing. So anyway, but I'm anxious to get there at the same time as you guys or whatever. Hey, Lunar, thanks for being here. I appreciate you for being here as well. All right. I'm going to go shut this whole computer down, and I'm going to open, three windows or whatever. There are 3 tabs, and I'm going to get on this live stream. I'll post the link in Discord. I think it's going to be more that guy Income Architects on there. What's that guy's name? He has a really good channel. But he's really, he's a really serious guy. Income Architects. Anyway, but I'm on with him and a few other guys. So like I say, I hope I can be serious enough for them. As you guys know, I'm a little bit on the silly side, but anyway. All right, guys. Yeah, I'm going to set my microphone right here, and I'm going to get my thing all set up, and I'm going to do this thing. So anyway, check out the spaces if you want to. I'll post the link in Discord. All right, guys. See ya.